Good to see you all here on this Friday as we get ready to go ahead and take a look at some charts, ask a lot of questions, and make sure that we do our best to make sure that above all, we stay in front of it. I don't know, Jay Core. I got the bears lurking in the background, and you have to ask yourself and wonder, is this the most telegraphed, euphoric bubble top that everyone's aware of in history? Or is this a trap being set to go ahead and rope those guys in? We're going to ask a lot of questions right now. I have to say, this is probably the most alarming chart of them all. This is the 10-year coiled up, been coiling up since the summer of 2023. 3 years later, as we enter into the summer of 2026, was Tom Lee right? Was Tom Lee right about as soon as the Fed chair is concerned, market's going to come in and market's going to test them? Does today begin the pullback, the 10 to 15 pullback on the S&P 500 before straight up to Valhalla? I don't know. We're going to ask a lot of questions today. We're going to take a look at a lot of different vantage points, and we're going to go ahead and do our best to make up our own minds. But I have to say, I hope this doesn't come to fruition. You all know that the coil has been going on for 3 years over here. If this breaks out here to the upside, this could get very ugly very quick. Or, just like we had a liquidity grab down over here, it can wind up being the same. But again, for sure, genuine concern about what's taking place here. There is speculation now that Trump has returned from China that we might see a resumption of the kinetic war occur in Iran. That could absolutely be a catalyst to send this thing up. Or we could see pressure put from the other side, the Chinese side, and we could start seeing a lot more ships continuing, as we saw in the past 24 hours, passaging through the strait. It looks like a problem that's not going away. And the longer this problem doesn't go away, the larger the ramifications going forward. Wow, we have like, this is not sell and may go away. This is hold on. This is ride is just getting ready to go. Nasdaq gap down, and then so far continues to remain near its lows. We go switch to a weekly time frame. Well, it looks like a shooting star, or is it a shooting star or a doji? It looks like a perfect doji if we close right at the weekly open. And I'm going to go ahead and I'm going to say, you ready? Next week, I think that we have a very similar looking candle, 2 in a row. Imagine that. Next week, we have, of course, on Wednesday, NVIDIA earnings. Big deal. It seems that China's not interested in buying the H200s, and they said we want the better ones. Not only do we want the better ones, we want to be able to go ahead and produce better ones than you all got. And the semiconductor race continues to go on. Guys, on the weekly time frame, one thing that we are watching for, and you could look at this week, well, probably most people are looking at today. You got the bears looking in the background, and they're like, wow, this is really, really, really bearish. And you could look at, since the beginning of the month, since the beginning of May, sell and may go away, we're up 6%. That's a pretty healthy return so far in the month. We know volatility begets volatility. We saw some downside volatility lead to one of the greatest ascents in the market. Actually, there's only been 3 other that are on par. So I'm going to have to jump over here. And there's only been 3 other times. How many times did we talk about this chart? But we did it like this. Remember, we always said, remember we called the top over there of the peak of inflation. It took a few months actually to roll over. It was the summer of 2022. That 9.1 print, CPI print, we said that's the highest print we're going to see. And then it took months before it rolled over, accelerated down. We came down. We were like, and then we've talked about how the second wave is higher. I hope we're not here. I hope that we are not here. I hope that we're not. But what would that mean for the markets if we were? By the way, this is not the chart I meant to show you, but this is the chart we're starting on. If you look at where we are right here, ding, 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 and you go back to the 1970s, and yeah, the situation is much different than it was back then. And I at the same time, it's much the same. But look what happened to equity markets as that inflation roared up, peaking in 1981. You can see 1980, Jordan, not 1981. Peaked in 1980. Markets continued their ascent through 1981. And then you could see as the markets came down, deflationary forces taking down inflation. But as inflation's rising, markets continue their ascent up. Not much different than we saw from the 2020 flooding of the system of dollars by Powell. Worst Fed chair in history. K-shaped and his legacy should be the K-shaped economy. He dwindled out the middle class more than anyone in our lifetimes. That's my opinion. But anyway, here we go. We're looking at something in inflation, and we're talking about that rise we saw in 2000 to 2021. We know markets peaked late in 2021. This is the chart I wanted to show you, though, and this was S&P 500, 20% in a month. Two other times it's occurred. You can see it back in 1929. Is that 1929? Maybe with some dates over here. I don't see any dates over there. I see two arrows of it happening at one time, and I don't know if it's close to, it looks like there was a lot of room left to that blow off. Boy, oh boy. And then you could look at what happened in the dot-com bubble 2000. You saw 20% in 4 weeks, also in 4 weeks, now in 4 weeks. And you could see both times they had more to go. Is this time going to be different or a lot of the same? We see that the semis have been going parabolic, and a lot of people are very familiar with usually how these things end. I'm wondering if this is the most telegraphed bubble top in history. And you can see over here, look, I mean, is this going to continue going straight up? I'm reminded though of, if you remember, early 2025, as gold on the monthly became overbought. I'm reminded of how that went on for 11 months. There are people like, oh, gold's RSI it's reached 80, it's done, it's overbought, and how that continues. Sometimes, it's very rare, sometimes overbought can remain overbought for an extended period of time, oversold as well. If you look at the semiconductor index, and you could see, let me go ahead and just bring this guy down a little so we can read what's going on. The most overbought since the dot-com bubble, with the RSI over here above 85. And a lot of people are obviously reminded of what happened in the dot-com bubble. However, if you look at it from this perspective, this is the gap above the 200-day moving average is the widest since 2000, but there was a lot of room to go. NVIDIA, again, will be sharing its earnings on Wednesday. NVIDIA is coming out of a 9-month consolidation and now starting an epic ascent ahead of its earnings. Big earnings ahead. And it's going to go ahead and do some simple CTM. Watch that line. If that line breaks, that is going to be what would set up, obviously, a test of 194 support, resistance flipped into support. If that doesn't hold, that situation becomes a lot worse. But you have to wonder, after such a consolidation, and one thing that's really important here, I wish I could just go right to the margins. I'm looking. We'll get there in a second then, right? I'll come back to that chart right here. Over here is the margins. So this is saying S&P 500 profit margins. We know that right now, the semiconductors are making up an immense chunk of that. And then on top of that, big tech. And you could see that right now margins are going through the roof. I wonder if this is different. Not Wednesday, not next quarter, not next year. But as we move out, I wonder if if we see further competition, right? We see that Elon is trying to build out this massive moonshot of a new fab, and you see China obviously working at it. And I could picture a time in the not too distant future where margins are coming down because price competition is becoming a lot more robust. Yeah, that's a great sign, Joel. Not that you're not a great sign that you're frustrated, but most of the time when people are indeed at the lowest time of frustration is generally when we see the biggest returns occur. Massive leg down and caught on Ethereum. And then since then, we've hit into one of the toughest periods that I know. Just strong. Look at that price action. So tight and wound down. One of the most difficult that I know. The only other one that I know that I remember in 2022, we would go ahead and we would look at every single, this was on V2, we would look at, I'm sorry, CTM 2.0, we'd look at every single lengthy drawdown running sideways period. And the greatest one was back in 2018. It was when Bitcoin went sideways for 6 months before falling 40-50%, basically it's what seemed like overnight, but within a very short amount of time. And the takeaway that we all have, and we could go back and look at things like, I remember this one right over here. Let me pull this one up. Hold on one second, Joe. Let me just jump down over here. That's Bitcoin bull runs. This one, oh god, sorry. Thought I had it over here, and I don't. I was looking for on CTM 2.0, which is right here anyway. I was looking for, if you were looking at the P&L over here, and why we were into here was this very similar situation, Joel. The frustration was, I'm sorry, it was late November, December, where everyone was just like, right onto here. Drawdown at a new high drawdown. In the Discord, template's broken. Ace was like, the template's not broken. And then within just a few trades, shooting to new all-time highs on the PNL. Look, I think that this price action that we currently are seeing is going to come to an end. I don't think it's going to continue. I think the drawdown on Bitcoin is currently about 17%. Let's go ahead and check. 17% on the year. It's a mega drawdown, and it's hard and frustrating to trade through. I'm sorry, that's through March. Hold on one second. Well, I guess that's the peak of it. Since March, which is a short time, 2 months, 17% drawdown in the thick of it. Very difficult. Listen, as you fast forward a year, I'll just move back a year. It's going to be looking a little bit different. And then as you start adding a little bit more time after that, it's going to look a lot different. And then right now, feel you. It's been frustrating. It's not frustrating. It's what I would say grueling. That's why it's a grind. And it's very, very difficult. But soon the tide is going to turn. This type of price action that we currently are in is contraction leads to expansion. And we're very, very close. Now, I don't know what type of catalyst it's going to take. I don't know whether that move is going to be to the upside or to the downside. I don't know if it's going to be something like, I'm just going to roll a few things off my mind over here. Like whether or not it's going to be like, June and into the summer, the passage of the Clarity Act. That might be a tremendous fundamental catalyst for Bitcoin and the space, or if it's going to be something like new Fed chair, market right now pricing in 64% chance of a hike this year, and then fast forward as we move into September and markets realize, wait a second, this energy crisis is getting way worse, it's not going away, and instead it's panic cuts, and Wash, it delivers those cuts, but for the wrong reasons, and they have no choice, and the markets are actually in free fall, and then that leads to liquidity bursts going the other. I don't know how it's going to play out, but I do know that the current regime that we've been in is soon about to take a turn. Look, so far and structurally, this looks good. This is a good chart to bring up at this particular moment. And this is looking at short-term holder MVRV. And you could see that normally when Bitcoin is able to regain the STH cost basis right now, 78,400 and roughly $400, and then hold it, that's usually the sign of a bottom being put in. That reminds me a lot of the Fed cycle, late 2019. And then again, it was upward sloping before the takeoff. Could go the other way though, right? And people might say, look, I told you that was a bear flag. I'm like, well, it's not a bear flag because the flag can't be as long as the pole, but it is a channel. And if this breaks down and loses the red line over here, yeah, we could see a significant drop. I have no idea what was going on in the markets at that point in time. I don't, I is the bears lurking a sign of what's to come? I don't think so. I personally don't think so. And let's go ahead and just share a few more charts to work out the macro view that we're looking at over here. I'll work backwards over here. And this is looking at S&P 500. This is only using a 16% gain. We've seen 20% gain, 16% gain every other time it's happened in the past, except for the track that is most similar over here. If you look 4 and 5 years, it's been pretty bad. But you could see looking a year out, 2 years out, it's generally very, very, very favorable from where we are. We seeing indeed 2020 sharper, quicker cycles, a lot quicker. The move to the downside has been pretty mild. 2020, in the face of monetary policy being tightened, we did see that bear market. Again, right now, monetary policy has gone from tight to loose. We talk about fiscal dominance. Right now, we talk about how alarming it is to see rates going ahead and selling off so hard, especially the 10-year mortgages, car loans. It affects the economy on a very large scale. But then you have to talk about the debt being serviced as well. And they're going to have to print to service it. There's no doubt. Liquidity right now is turning up. And if that continues with the funds, with the flow of funds we continue to see, likely that is what the paramount force is. Are we going to see over this past next 4 weeks some type of drawdown? And is that drawdown going to be something like 2-3%, or are we going to see the Tom Lee new Fed chair midterm election pretty strong drawdown? Obviously, nobody knows. Let me go ahead and just pull up a couple of this. I think we should sit down and talk about, and this is not for today. This is looking at market cycles, and you could see leading up to or after the roaring 20s and the Great Depression, you had a 12-year bear market and then a 24-year bull cycle. Come back into the 70s, you had another 9-year bear cycle. I think it's why so many people, Stanley Druckenmiller years ago being like, I think we have a lost decade ahead. You often hear the lost decade because it's the rhythm that we've seen so many times before. And then coming out of there, another 25-year cycle, 24, 25, and then another 9-year bear market, great financial crisis, dot-com bubble burst, the move up, double top. Look at that, double top both ways. And then you saw the massive move down. And then so far, is this another 24, 25-year bull? If it does, look, guys, look, you guys, we're not ready for those type of numbers. The only person I've heard talk about those type of numbers, what did Trump say? Dow 100,000? I don't know, but we should spend some time and look at that. Some people talking about the Hindenburg Ullman signal yesterday printing. You probably saw it where you see new highs and new lows triggering at the same point. Tom McLean saying, you know what, it just didn't happen. It was very close. You should be alarmed, but it wasn't an actual signal. And you could see usually when those triggers are kicking off, they don't tend to be the top. They tend to be a warning sign that we're getting close to the top. timing is everything. I wonder if we could try to step in and work our way backwards over here and talk about timing. This is looking at correlation between high yield bonds and S&P 500. And what do you notice about this chart? You could see that once again, it's hitting an extreme reading. I go back and I look at the last time that occurred, that extreme reading. When was that? That was late 2019. Obviously, what's interesting about that is that seems to be the same place in cycle that we believe we are today as the Fed was forced to stop QT and begin running the balance sheet up. What happened between now and then? Is it similar? Is it different? Well, there was a long move up. So that's the question of what happens next. Is this the top? A lot of people getting concerned, I think for good reason. But is there more room to run? Is the question. Is Nvidia going to be a catalyst in that next week? A lot of people feeling bearish, and it's funny what a 1% move, 1.3% move on the Nas could do when you're looking at still for the month up over 6%. And if you look at the last 4 weeks, just up, well, 1, 2, 3, 4, up 10%. So that's the psychological nature of humans and investing. Speaking of momentum, let me jump back and talk about our current positioning. Good reason, Joel, to be feeling the mega grind of this price action. Usually, this particular moments lead to the greatest gains coming out of them. Flavy was the Flavy filter he would look for when you saw an abnormal amount, that a set of 10 of losses in a row, 7, 8, 9. That's when he'd want to be focused, because usually coming out of the coil would be when the biggest moves occur. Big moves come out of nowhere, and our current positioning across stocks is a testament to that. If you go back to when these entries triggered not too long ago, most people weren't expecting the follow through that we're experiencing now. The same thing is going to happen when we look at Bitcoin and crypto. I don't know what the catalyst is going to be. I don't know if it's going to be something like regulation, the Clarity Act, or if it's actually going to be liquidity once again turning up. We're going to have to just grind through it and stay on the right side. That's the only way. And again, diversify. It's why stocks and crypto are the way to go. I'm looking for a particular chart. That's the chart I wanted to look at. As far as plays on yields, right? Is wondering what's the play over here. This is more of a warning sign. And if you see this breakout occur, again, I think it's going to be dependent on what happens with the price of oil. You could see as this is getting close to breaking over here and out of the coil, it's much the same over here. I don't know. A lot of people are expecting to see potentially a restart of the kinetic war in Iran this weekend. I don't think anyone wants that. I don't think it's going to happen. I don't think China wants it. And if that does, though, and it wasn't going back, we said last week, oh, watch if that happens over the weekend. If this happens, that's something that's going to go ahead and blow the yields out. If that's happening, I imagine that equities are going to feel it. Question is, and I don't have this answer, neither do you, is it something that will be long lasting? As far as plays on yields, if you got what I was talking about, what I thought would be the ultimate resolution of this. And again, that was wrong in so much as I was not factoring in the whole situation that's occurred in the Strait of Hormuz. That makes sense. It's happening in light of that. It's like someone calling a bear market at the beginning of the year in January, recession in 2026, before the conflict and the ramifications of it broke out. Why? Now, there are those that are mega bearish, right? Obviously, your feed's full of them. And again, you could understand why, but that's also hard to say, like, well, you've had a one of the sharpest runs of of the market's history in a short amount of time, and you are calling for, the end of the world during that period. That doesn't line up as well. Timing is everything. Now, all of those calls and all of those outlooks, they make sense from an intellectual standpoint. However, again, it it doesn't matter if you got left behind on a 24% move up and you didn't capture. That's the same thing as being caught long and then having a 25% correction to the downside, simply on the wrong side. If this does break out and then go higher than a lot of people expect, that would be the only time that I would look for a play on bonds, and it would be to buy them. It would be looking for some type of catalyst, and likely that would have to be, intervention from the Treasury and or Fed, or in unison, and that would offer an opportunity. I would not step in here at this particular moment as you're into resistance. Resistance is resistance till it's broken. If it breaks out to the upside, I think there's potential here for that thing to squeeze a lot higher than anticipated. During that max pain, that would be the time I would only be interested, and not to, like, for a long-term play. Bonds are for trading, in my opinion. This was the other one when you had the breakout, but it's in the past. There's no play today. You're into resistance. Does it wise at this particular moment to step in and to buy bonds? No. What happens if situations get way worse out in the Strait of Hormuz and with Iran, and the hot war starts up again? Then my expectation, you're going to get very hurt on that. The only time I would step in personally, if you were seeing an extreme happening. Were the extremes happening out on the semis? Yeah, clearly. And again, everyone could see it and or aware of it. There was an amazing article. I wish I could pull it up. I won't be able to pull it up. I'm going to try and pull it up. I guess maybe it's on premium. This was yesterday after the close. I don't have it. Oh, hold on. Page loaded. One more, y'all. One more. SpaceX IPO. How to play it. Hold on, I'll talk about that in 1 second. So, do we have a date yet, by the way? Elon said in April we were going to see the launch of Twitter X Finance, or that's never come to fruition yet. I wonder what's going on, or when the IPO. I don't see it. I'm looking for it, and if I could find it today, I'll share with you on Monday. But obviously, this trade looks like it had come way too far. What I wanted to talk about with you was how options were priced at that particular moment. The article, the headline had to do with, why this is the best time to go ahead and sell call options and then buy puts. It turned out to be 100% on point as far as timing. And anyway, SpaceX IPO. Listen, if I had a crystal ball, which I don't, I would imagine that I saw a headline just the other day, and it was like some billionaire from Europe plans on buying like $1 billion of the SpaceX IPO. And when I read that, I'm just wondering, like, is that real? Is that kind of like a way that whatever agencies behind the SpaceX IPO is marketing it? I don't know, but I would imagine, assuming that there is a lockup, and that lockup is for, I'm going to say, 6 months. I don't know the details of the IPO yet. That the initial reaction would be like a strong vertical move opening day and continue. And I think that if you were able to get shares, and I think that I personally would be looking to, if a favorable opportunity arose, to unload, and then I would wait for that whole. Look at this. This is a great. We'll look at this. Let's look at this together right here. Let me put up the the Circle IPO. You know, look at it. I mean, if this is, and I would expect something similar. I don't know what on one time horizon or anything like that, but I would think that the initial euphoria of the SpaceX IPO probably sends it into orbit, and then I think that you get a facing. This is the hype phase, and then entering into the facing reality phase. And I would think that's going to happen. I think that's going to happen. And I think that if it does, and you're able to go ahead and unload and then DCA in on the way down, can wind up being a very good long-term play. That's the way I would be playing it. That's the way I'm playing it. That's the way I plan on playing it. Now, sometimes or often when you have ideas in your head, they don't often play out like that. And that's the truth of it. But it seems very favorable. We see that Alphabet is looking towards using SpaceX to go ahead and also launch and be able to also put up data centers out in the atmosphere. So it seems like it's going to set off a lot of speculation out into the space and satellite and data centers continue. I think it's going to be good. I think that there's a strong opportunity. It becomes a liquidity event for a lot of people who have been holding shares for a long time out on the private markets. And I would expect, I view this as opportunity if it occurs on SpaceX. This would be what I would be looking to DCA into. I don't think it just shoots and runs. Say I think Anthropic is so that's guys. I remember the Alphabet, the Google IPO, and I remember the Facebook IPO. And there's not often IPOs of that caliber. Back then, Google became a verb. Like everyone was like, did you Google it? Did you like? It was a technology, a new technology that was used in everyone's life. And I think Anthropic is a lot the same. I can't remember in that 20-year difference of another opportunity. And Meta too. I mean, obviously everyone used Facebook, and then everyone's parents started using Facebook, and then everyone got off Facebook, and everyone got onto Instagram, but Meta bought Instagram. And I think that Anthropic is it's something I want in my portfolio completely. And I think it's rich. Yeah, I think the valuation is going to be a lot richer by the time they do IPO than it is now. I think it's rich now, but I also look at and I'm reminded of when Google bought YouTube, and a lot of people thought it was so expensive at the time. I think they bought it for $1 billion, and and now they make like $7 billion of revenue a quarter. I don't know if that's correct. I think it is, but I don't know. I used, I think I put it into the devs on Discord. I think like 2.6 million tokens in the last 30 days. Yeah, I'm a big believer in Anthropic. SpaceX is a little bit different. I think that if Elon is able to pull off what a lot of things that Elon goes to pull off, I think there's going to be a lot of Elon wow factor built into it. I think honestly, I think Anthropic is a monster, and I really want to have that in my portfolio. Yes, I'm worried about the valuation at the time they do IPO, and I'm also worried about what happens in the future. And I don't know that today is the top. I don't think today is the top or anywhere close to it. And I think that if we're gonna, but I get worried. And one of the things to worry about is not too far off. What happens by the summer, the end of summer, if the situation is not resolved? That we're going to start seeing long-term consequences, and that could lead to, for sure, globally, like severe consequences. I think the US economy is still resilient enough where it'd be able to absorb it and it will be okay. But again, a lot of corporate profits do come from overseas as well. If we start seeing the job market actually weakening, remember, I was a proponent that no, it's going to stay. If we start seeing it weakening, then I'm gonna get worried. I'm not there yet, or I'm worried about the potential, but I'm not worried about the situation at this particular moment. Um, I get worried about when this build out actually comes towards a stop, a peak, and I get worried about when actually inflation is not growing, but inflation actually is grown, and then we get into that stagflation. And I think that this is a really good illustration of what that could look like. And we were looking at that crazy cycle, the 25-year, 24-year. And look, and I don't know if it's today, and I don't know if it's 2027, 2028, or if it's even for like further. When it comes though, I think that there's going to be a severe and strong price to pay. The only thing that would put that off would be if indeed we were to see a productivity miracle. And is that the humanoids? Is that the advancement of AI? And does that lead towards some type of new like golden era? Well, I think that in between that actually happening and between the advent of that new era happening, which is now, we're in the middle of the AI era. It's real, it's happening, and before you get to that goal, I think that there's a big chasm in between. And once people start losing jobs, once inflation is making the cost of living absolutely. It's not like that right now. It's a lot different. I know the world's a lot different over the last 6 years. We've been through it here together. We're very aware of it, but it's going to take another step up. And when that happens, that's when that's when I think that we have to get worried. Or again, if we see monetary policy change. Right now, it's very accommodative. Right now, the amount of that passive bid into the markets that we talk about is an enormous wave. And stepping in front of it, like Burry's doing, I think Burry's right in what he sees. He's notorious for bad timing. I remember March 2023 when he was like sell, and I was calling an actual like waterfall, the inverted chart of the NASDAQ. And I think we're into a similar situation. It makes sense what he's seeing. Timing it is everything. Is this the top? How can we look the top? How can we find the top? Let's just go ahead and we could say that usually, well, price is what leads. And if you were to see a, you know, like pretend Tom Lee's calling for a 10-15% correction, and let's say that winds up being a 20-25% correction, and not by the end of the year Ethereum a gazillion as he's talking about, but bad news bears, and we come back and we're testing this trend line that's only 14%, break the trend line, test the tariff April lows. If the Nasdaq's off, that's when there's problems going on because that reverberates throughout the economy. How do we know when the top is coming? And is this 1% pullback today the top? I'm looking at that steep, steep, steep. Guys, this is so hard because this is again, that's a good thing. You ready? This is what I was trying to say. And you could see that the first breakdown, and then you could see a second breakdown. But you all know how often those things could get faded. I don't see it. Weekly is something I'm pointing out to you. If we had some type of strong weekly move down, that would concern me. We don't have that today. Is it a potential reversal over here? Have the bulls and the bears actually come to some type of equilibrium? Well, for the first time in 6 weeks they have. And I mean, guys, this move is historic. It's historic, and finally we've come in towards some equilibrium. So that's good. That's actually healthy. The question is, are the bears able to actually become a force and put in a move? That's what we're waiting to find out. And they have to prove themselves at this point. Right now, actually, the Bulls have massive control, you know? And I remember prices over here, and buying at Max 7, prices over here. Oh God, I'm gonna unload that. That was a quick grab. So early. Bulls in control over here. If bears take control, then I'll be leaning into and looking a lot for, hey, this might actually be some type of correction that actually lasts through September. And, like seasonalities, midterm elections, as we move into October, that's usually when things thrive. But let's figure out where we are around that time anyway. What's the price of oil? Where is the 10-year? And are we starting to see ramifications reverberate? Is the job market now beginning to slow down and weaken? That all could be in play. And if that's in play, we're going to have to pivot then. Yeah, so Hermes takes up a massive amount of less resources. Is that what it is? Look, I prefer, like, if you like to tinker, that's fun and that's good. Uh I'm more like, first of all, I guess it's hard to say. Um you have to be careful with security. And I think that when we see right now the SaaS industry have gotten destroyed and obliterated, I think as you move out further, I think that there's a good chance you see like Salesforce make such a strong comeback as people realize that they need the security that these outfits could offer. I would prefer agents running on Anthropic than I would running OpenClaw personally. Um, it's dangerous out there. Oh. To Tesla IPO, I was not I didn't buy a Tesla IPO. Did Elon take that over? How did I don't remember. I remember a lot of people. I mean, hold on one second. I'm looking for the chart of Tesla. I remember a lot of people back in uh 2000, really 2020, really beginning to take note and get involved. I know a lot of friends who made some really good investment at that point. I remember a lot of macro people like Grant Williams at this particular point talking about how it was all a scam. It was going to go to zero. The big Tesla shorts that occurred in that time. Bill Gates shorting it at that particular time. Tesla here trading right off of all-time highs. I don't know. I'm a fan personally. I think that, um, obviously I view Tesla not as a car company, as a tech company. And if they're able to make this transition that they're looking to pull off right now and pull up, I don't think it's about the robo-taxis. I think the robo-taxis could be a good driver of revenue. I think what it's about is the move towards the humanoids. And I think that Elon's joint venture with SpaceX and trying to build out these semiconductor fab is to power the revolution. Otherwise, it doesn't happen. I think it's going to pull it off. Bitcoin miners have now become AI miners, I suppose you could say, right? And with good reason. I didn't. There's a on the What Bitcoin Did podcast. I think one of the recent guests is one of I'm making this up. But I think it's true. Is one of the executives of CleanSpark, and he talks about why it makes sense for Bitcoin miners to be providing compute now for AIs, and maybe that's true. Maybe some of that's true. Maybe a lot of that's true. But if that's what you're interested in, check that out as a vantage point. But listen, my play on the miners is coming from Block, and Block for me is a play for Bitcoin and a lot of these miners. And go ahead and look at their holdings. Look how Block has outperformed Bitcoin. Look how it's outperformed IBIT. Plus, it pays that nice 34-36% dividend, and it's not something that's seen. NAV erosion. It's definitely very correlated to the underlying. One of those is Bitcoin. Also has an Ethereum play to it. Is it risky? Everything's risky. There's no doubt about it. But that's personally how I view and or play the miners. If you go and you look at the Nicholas Crypto Income ETF and you look at its holdings, you'll see, for example, Riot, Iron, and others. And that's how I view it. That's how I play it. And so far it's been the right move. Hopefully that continues. That's probably also dependent also on what happens with the price of Bitcoin and also the markets. And if you move into any type of sustained sideways drawdown, it's never pretty. For me, that's a time to go ahead and reinvest the dividends into the underlying and wait for that return. If time is on your side, I think it works out. There are red flags. I've pointed them out on the CTM portfolio. If the certain assets under management were to decrease below X level, that would be the time to watch out and exit. Anyway, do your research. We did a video on it. We've talked about it. And that's my play on the miners, but they're heavily involved here. Yeah, I thought you did, Cabby. We were talking about it. I don't know about 12. That's bottom ticking, but definitely in this range was when we were talking a lot about it. Boom. Maybe there's a lot I missed. Let's go ahead and try to go slower, but sometimes I don't, this is something that Dog and Nation brought up about a month ago, and he was talking about as AI CapEx increases, that one of these passive flows into the markets, one of the most powerful, obviously retirement accounts, the most powerful passive flow. That's why you have to watch the job market, and something that could take away from that momentum would be a significant loss of people in the workforce. Then you have less of that passive flows coming in. Another powerful force is the buybacks. And Dog Nation was making the case that maybe you might see this CapEx spending like whittle away at the buybacks. You could see that's happening right here. You could see the buybacks over here in yellow plateauing now, as you continue to see in blue the CapEx, trailing CapEx continuing to increase. And you can make the case, and I think it's right, that money that's being spent on CapEx spending instead of buybacks. However, if you look at stocks that are spending on CapEx, they've wildly outperformed those that have, like Apple, right? High buybacks engineered instead of CapEx spending. So something to watch out for, though, something that could present a changing dynamic in the markets, which is why I bring it up. For now, though, everyone, have a great weekend. Rest up. Joel, I feel you. I certainly feel you. This too shall pass. Everyone, have a beautiful day. God bless you. I'll see you all on Monday.